Hey guys, welcome to Tan Investing. If you're new here, welcome. In this channel, we will look at investing, savings, Canadian growth investing, Canadian value investing, Canadian dividend stock, along with personal finance. If it's something that interests you, please don't forget to subscribe by clicking the red button at the bottom. Let's get started. So today we will look at the strategy for compounding is to invest early. So the longer your money is invested, the more time it has to grow. When it comes to compounding return, time is an advantage. So start contributing regularly, regardless of the amount. The important thing is to start and be consistent. Even small contribution made each month will grow. You can increase your contribution as your financial situation changes throughout the life. Just stay disciplined. Be patient. So don't take money out. As your savings grow and earn compound return, the gains made through the compounding will also help you with building your wealth. As you can see, when we invest early in our lives, the amount keeps growing at a specific interest rate. At that time of maturity, it becomes a big chunk. So let's look at an example. Long back, when the investor of a chess showed the game to an Indian king, the king was so impressed by the new game that he wanted to reward the inventor. At that time, the inventor replied, "My wishes are simple. I only wish for one grain of rice for the first square of the chessboard, 2 grains for the second square, 4 grains for the third square, 8 for the fourth square, and so on, all 64 squares, because there's 64 squares in a chesswood." The inventor said, "Please double the number of grains in the next square compared to the earlier square." The king was amazed to hear that the inventor had asked for such a small reward. He happily agreed to the inventor's request. However, after a week, the king treasurer informed him that the reward would add up to a huge number, far greater than all of the rice that they could possibly produce in many centuries. Do you know why he said that? And how much of rice it would be when one reaches 64 square of the chesswood? As said earlier, in the first square of chesswood, there is only 1 grain. But when you come to the 64th square, it's 18 million trillion grains of rice. This is more than enough to cover the entire surface of the earth. As of all of us behave like the king in some way or other, we find it hard to understand how the power of doubling or compounding make numbers So you achieve compound interest by staying in the market. So all that means is buy and hold, no need to do anything else. On the other point, you will notice that the performance of a stock is usually quoted in terms of compound annual returns. So example, if a 3-year return rate is 5%, your initial investment is $1,000, you will have 1,000 times 1.05 times 1.05 times 1.05 for 3 years, which would equal about $1,157.63 after 3 years. So the return was as a total percentage is $157.63, which is the 1,000 minus 1,157.63 divided by the initial investment, which is a 1,000, which equals 15.7%. So not the 15%. That's the power of compound return, the sweet extra 0.7% on the total return. I shouldn't need to say this, but stock performance is always backward looking. So there is no guarantee of some returns going forward, as the simplified example that I showed above. Investment grow at an unpredictable, inconsistent rate, but over the long term, it averages out to some average growth rate on which you can use compound growth math. There are lots of reasons why investments might grow on average at a consistent rate percentage wise. So each dollar in value gained does help with the next. So for example, let's say a tea chain has publicly listed a stock whose value grows in perfect proportion to their earnings. Their earnings might grow 2% a year as they raise the prices with the inflation, and another 2% a year as more tea drinkers buy their product with the population growth, for a total growth of 4% a year. So $100 invested in a year one becomes worth $104 in the next year. That extra $4 in value does include does does indeed also grow by the 4% again the second year for $108.16, as the compound growth math suggests, and so on. Now that doesn't mean it will always be whatever growth rate. The future is unpredictable, and investing does involve risk. So for example, that 9.52% is the performance of an ETF over the last 5 years. But it wasn't 9.52 every single year. It got there by being up 21%, up 9%, down 8.8%, up 22.9%, up 5.6%, and so on. So the average is out to about 9.52% a year. But the first year, 21% gain is also enjoyed. The second year of 9% gains, compounding the. So if a stock or ETF has 2% dividend yield, you're getting $200 for every 10,000 you're putting in every year. So 10,000 becomes 10,002K. The next year it's 10,404, then 10,612. In 10 years, you're now sitting at 12,189.44 just from reinvesting your portfolio income back into itself. So the real power of this is when you combine compound interest with dollar cost averaging. Now you're speeding up this compounding by adding more money to your position each month, each week, and etc. Now we will just take a quick look at a chart for Royal Bank, for example. As you can see, back in 2011, it was trading around $60. So now I think I've given you a lot of example. We will look at one more example here. So say, for example, if you start off with 100,000 and you're earning a 2.5% interest, you would be getting 102,500 on the first year. On the second year, you take the same 102,500 invested, you're getting an interest on that amount, which is going to be $2,562.50, which is going to put your total value at 105,062.50. You take the same amount and you invest it again for 105,062.50. The 2.5% interest is going to get you $2,626, and that's going to work out to be about 107,689. And after, let's say, at 25 years, that initial investment is going to grow, plus the interest and everything that you've gained. It's going to be 180,872. Your interest alone is going to be about 4,521, and you're going to have about 185,400. So you can see how that plays a part in your investment. So I think I've given you enough examples for you to understand the compounding interest and how that works and how that would help you on the long run. If you still want me to explain anything, hope you guys enjoyed this presentation. Please check out the other videos if you want to see any other videos. Please let me know in the description below if you want me to do any other type of video like this. I do want to expand my knowledge in Canadian market, investment, finances. If you want to let me know anything to improve my channel, please do so in the comment section below. Thank you so much for taking your time and watching my video. I'll see you guys on the next video. Take care. Bye.